just met with a client of mine. He turned 25 this year. He started his policy when he was 24. He had a plan of what he wanted to do with the policy. Mm-hmm. Now this year we've just had our yearly meeting with him to plan out. We're gonna start to. He took out a loan for his wife's car, and he took out a loan to build a privacy fence for his kids. But we're going to take the cash value, and we're going to start to pay down those debts. I'm excited now because now we're talking about attacking the house next.
Yeah.
This kid's going to be 32 years old, and he's going to have his house completely paid for.
Well, welcome back to another episode of the Life Insurance Academy podcast. We got a special edition episode today. As you can see, we're in like workout gear today, but our guest is not in workout gear, and we snagged him. He's in town, and we grabbed him. Welcome back to the Life Insurance Academy podcast, Jonathan Henderson. How you doing, man?
Doing awesome, Roger, man. I appreciate you inviting me on, Chris.
I always feel like I need to chest bump you when I see you.
I know, right?
I know. Right?
I love it.
It's fun. Jonathan Henderson with Legacy Life Co. from Greenville, South Carolina. Dude, we're here to hear a little bit about your story today. What agents, for those of you who are listening today, watching today, what we're going to talk about is how Jonathan found out about the business, how you actually got engaged in using life insurance as a tool, a resource, before you became an agent.
Sure.
But that kind of inspired your journey to become an agent, and now you're building a large agency. So let's talk about that, man. How did you even get exposed to this? Well, I mean, most people know about life insurance.
Sure.
When did you really have the life insurance conversation for the first time that it went, something happened?
Well, I started surrounding myself with people that were way smarter than I was, people that actually made real money. I knew a bunch of people that made some money, but just because they made money didn't necessarily transition them into actually knowing what to do with that money and how to protect it, how to grow it. And I had a guy, I would consider him a friend, and he said, "Hey, you're making some real money. You might need to look into protecting that money, putting it in a place where it's guaranteed growth and stuff like that." And I went, "Yeah, okay." It was sure,
give it a thumbs up.
But there again, this guy was smart, and he made way more money than I did, way more money. And I said, "Well, send me the information." And he said, "Go buy this book."
Go buy a book. That's the thing you always want to hear, right? When your friend's like, "Go buy a book."
Another thumbs up.
Yeah. Sure, bud. Sure. So I did buy the book. It was, by Nelson Nash, and it was Becoming Your Own Banker.
Okay.
A real short book, 92 pages. He said, "Now, when you read this book, when you get done with it, give me a call." And it was about 6 or 8 months later, and I saw him again, and he said, "Hey, have you read the book?" And I was like, "Nope, I've ordered it, and it's sitting in my house, but I haven't read it yet." So it took me about another 6 months to read it.
A 92-page book, a year.
I know. Well, I do subscribe to the thought process that leaders are readers, and I understand that we've got to read. The problem I have with most people that like to read books is they like to read books for the sake of reading books. I like to read, gain knowledge, and apply knowledge.
Yeah. Yep.
And so it wasn't like I was just going through a bunch of books, that sort of thing. And that one was about personal finance, and I was about generating money, not saving money, not being able to grow actually what I had. So it wasn't at the top of my priority list. But that guy poked me in the chest then, like literally. He's a little bit bigger guy, bald-headed, bigger guy, kind of guys. He thinks he's swole, but he's not. And he poked me in the chest. He said, "Hinder, you need to read that book." I said, "Okay, I'll read the book." And so I read the book, and I called him up, and he said, "Okay, now you need to have a meeting." And I'm like, "Okay, well, who am I meeting?"
Is this the friend you were telling us about yesterday?
No, different one.
Okay.
Yeah, different
right.
one. Now, we still have the same friend, but different one. He knew also, and just chose to go down a different direction. But so set a meeting up. I had to fly from Greenville, South Carolina, all the way out to Kansas City, Kansas, and sit down with this guy that was about this tall and gray-headed. And we sat down at a Chipotle out there, and he said, "So, tell me what you get out of that book." And I said, "Well, that book could have been written in Chinese, and I would have understood it exactly the same." And he just kind of slid back from the table and laughed. And he said, listen, most people aren't exactly that honest. Like most people, they don't understand it either, but they try to make up something. I said, look, man, I'm not here to try to waste your time. I'm not here to waste my time. Like I don't understand that book. And he drew out 3 circles for me. And he explained what that book meant in 3 circles. And I got it. I understood the concept, but it also took me another year to take action.
Can I ask you, like, you read the book, you didn't understand it,
No.
but you got on a plane.
Well, sometimes
That's a weird thing, isn't it?
Well,
Chris asked the most obvious questions that other people aren't asking.
who are you hanging around?
Yeah. So there's a relationship and a guy that you trust.
That makes a bunch of money.
That's it.
Yeah.
Yeah.
So his credibility,
All
and
of his money.
influence
You know,
led
he
to
showed
say, I
me.
need to-
He showed me all of his accounts, and he said, "This is what I do." And I said, "I probably need to do that."
I think leaders are naturally curious.
Mm.
I think they are, and they take action. So I dig that.
I respect
Okay.
that.
Yeah.
Okay.
So, like,
It was a
our
little
listeners
crazy.
are wondering, what is this? What was the book? You don't understand. You're having a meeting. You took another year. What the heck is this about? What's the book about?
Banking on yourself, how to become your own bank, how to privatize your own banking system. See, where I grew up, you know, we were taught to go to school, get your grades, go get a
Crypto.
good job.
We're starting
right?
crypto.
You can start crypto. Anybody that is in the crypto space, you should have ran your crypto through your banking policy. Now you would not be crying,
There you
or at
go.
least as much anyway, because you could recoup every dime
Sorry,
that
I threw the
anybody
crypto
lost.
in there. That was just another thing.
You got me
But
going. Yeah,
Tell us about this banking concept.
absolutely. So
Using life insurance.
using life insurance, a whole life policy. You know, we have a specific outline that, you know, people that believe in the banking system as Nelson Nash, you know, describes it. People that believe in that methodology. There's only one type of life insurance product to be able to use with it, and so we choose to use a whole life product with a mutual company that has indirect recognition and that pays a dividend.
So you have to explain what indirect recognition is, because that doesn't mean anything to anybody who's
Well, the
listening
way
right
it was
now.
described to me, because I'm from the country and I like to keep things simple, they said you can pull it out and it grows like it's still sitting there. And I went, oh, I got that.
You can use your money, but it still grows like it's still there.
It's the way that you can, you know, I've always heard, you know, you've got to let your money make money. So I always thought that you had to like buy property. You had to actually spend money, put your money out there to say buy a piece of real estate or an investment and let that money sit over here to be able to grow and to make money. And through this whole process, you know, Nelson says that we've got to use our imagination, because a bank is nothing more than something where a place is stored. The way I describe that is you know, what's inside of a river bank. Not a trick question. What's inside of a river bank?
Fish.
The river.
The river.
Right? What's inside of a blood bank?
Blood.
What's inside of a food bank?
Food.
Okay, so if you go to your refrigerator tonight and you just bought a gallon of milk and you sat that gallon of milk in that refrigerator, because that's where we're going to store it. It's the bank. It's the food bank. It's our refrigerator. It's the food bank right now.
Yeah.
You put that gallon of milk in there and you walk away and you let that gallon of milk sit for 5 years. Are you going to come back in and drink it?
No.
See, there's laws that I didn't really understand that are in place. And so Nelson just had me thinking bigger, if you will, about the natural laws of our universe of how things work. So we're taught to go to school, get good grades, and go get a good job, right?
Yes.
And we're taught to go store our money into the bank, but yet our bank takes the money and they lend it to the borrower. And the borrower turns right back around and pays the bank for the bank letting them borrow your money. And then the bank gives you 0.004% of that money and wants you to be happy with it. In that equation, which is the person that's making all the money in the scenario?
bank.
The bank.
Yeah.
So there's nothing
Yeah.
that says that you can't privatize your own bank. It's called a commercial bank for a reason, because it's a commercial bank. It's not a private bank. Aren't banks the nicest buildings in town?
Mm-hmm.
There's multiple branches, aren't they?
Mm-hmm.
All manicured, landscaped to the T. All the employees are really, really smiling. They might even have popcorn in your bank, right? They want you to come in. They want you to be excited. They want you to bring you.
Nice
They
mints.
want you to bring you their money.
Yeah.
But it's your money, isn't it? It's not their money.
Right.
But they think it's their. See, it's all the way that we think. When we start to understand that we can become our own bank and we can privatize the way that we bank, the imagination tends to run wild at that point.
So how does it work?
So it's simple. We use a whole life product, and we make deposits. I do not like using the word premium when you start talking about privatizing your own banking system, because you make deposits into the bank, right? Well, we make deposits into our own bank in the form of premiums. So we pay a premium. That premium goes towards the cash value that's built up within the policy itself, within the structure, playing within the rules that are set by the people that make the most money in our country. Like, you got to understand that this system was set up by the wealthy to be able to protect their money. And that's why we're not taught
So
about
we're using
it.
the provisions inside of a whole life policy, the cash value accumulation that happens in there, which is really the amount that's over the cost of what the insurance costs.
Correct.
And so
So it's got to be properly structured.
yeah.
Because when I had my first policy set up, it wasn't properly structured. They were funding way more into a death benefit than whatever should have been. So you need to find somebody that actually understands the policy and understands how to set the policy up, because people that we're not going to name on this podcast that I totally disagree with when it comes to their views on life insurance in general, maybe their principles as far as building a business, but like their life insurance thought process is just crazy. We all know who we're talking about right now if you're in the space whatsoever. But it's how I can throw shade without throwing shade, right?
I like it.
So when you're, see, you made me lose my train of thought on that one right there. This is the point where we go, you're going to edit this out,
you're
right?
gonna cut it out.
No
edits.
No edits. No edits. But when you start to use this, when you start to use the policy itself, it's got to be able to provide the base level of insurance, so that way it doesn't hit the mech line.
So you want like the minimum death benefit, which is kind
Correct.
of like counterintuitive to anybody who's thinking about life insurance. Because you think, why would you spend more money on your policy than you have to? You're buying it so that it pays a death benefit when you die. But you're using the product and the provisions within the product for a completely different reason. So
sure.
you're actually doing something that most people don't intuitively think to do.
Correct. Well, nobody's taught to do.
Yeah.
Not
Yeah.
even intuitively. Nobody would ever think about that unless you're.
Well, we're starting to teach them. You're teaching them.
That's what we're here for.
Yeah.
We're starting to educate,
Let me
for sure.
let me ask you a question. And one of the things I love about talking to you is you break things down so simply. Very good. Very good. You have all these little sayings I think are awesome.
Yeah.
But you said he showed you 3 circles. That might help.
Yeah. I want to know what the circles are.
Yeah, that might help a little bit.
Well, it was the first circle. He said, where are we taught to go keep our, we're the first circle, the saver. We're taught to go save our money. I think we've all been taught that we're supposed to save at least X amount of % of the money that we earn. So that way when we quote unquote retire, that we'll actually have money to be able to live off of, right? And so we save our money. We're the saver. That's the first circle. The second circle is the bank itself, because that's where we're taught to go save our money.
Put
Is
the
in the
money.
bank. Go put the money in
Keep it there.
in somebody else's bank. Go put it in the commercial bank, right? Because that's where we're going to keep the money. The money goes in the bank.
Yeah.
The third circle is
Because it's safe there.
because it's safe.
Safer than under your mattress.
The third circle is the borrower, right? The person that goes to the bank that says, hey, I don't have the money to buy the car. I don't have the money to buy the house. I don't have the money to buy that iPhone. I don't have the money to buy whatever it is. Will you give me the money? And they're going, oh, for sure we're going to give you the money, because they understand the law of money. They understand the law of motion. Like, you've got to keep things in motion. So they're going to get rid of that money. As a matter of fact, the law will allow them to lend more money than what they actually have on hand. And so they want to get that money out there to the borrowers. Now, the borrower has to turn right back around and actually pay the bank back that money, and they're going to be charged a percentage that's called interest, right? And so the bank will take a little bit of that interest. Now, they still got your money, and guess what they're going to do when they get that money back? They're going to give it out again, right? They're going to keep your money that you've been taught to sit in that bank.
It's always moving.
They're going to keep it in motion.
It's just numbers moving around the world.
That's all it is. But they do it, but they don't want you to do it. They want to do it because they're going to make the money off of the interest, And then they're going to give you a small percentage of that interest and tell you to be happy with it. Isn't this great? You earned this amount of money without having to do anything. You just put your money here and it makes money for you.
Certainly not making any money this year. It's not keeping up with inflation this year.
If you have your money in a properly structured whole life policy, it's making money. It doesn't.
Well, tell us how it works.
There's a word called guarantee.
What's happening?
There's
Tell
a word
us
called
how these
guarantees.
circles work, and how does this work, and why did you start? Did you buy one? Did you get recruited? What happened?
So I met with those guys out in Kansas. It still took me another year to be able to get a policy. So this was 2 years after I first heard about the concept. First 2 years before I was introduced to the concept. And so what had happened was pretty simple, that I was locked in my house. I am not the guy that sits still.
Yeah.
Like I am outside 24/7. And we, in South Carolina, in the upstate area of South Carolina, we had a snowstorm, which meant that we had about a half an inch of snow, and it shut everything down, like literally everything down. And so I had nothing to do. And I said, I need to look more into this. And so I started looking at some different resources. I read the book all over again. I read the book in a couple of hours, where it took me 6 months to read it the first time. I read it in a couple of hours the next time, and then it hit. And I literally picked up the phone and I called and I said, I need to get started with this right now. And so we started implementing that system about 8 years ago. So we personally bank ourselves. We've been doing it for 8 years.
What do you do?
So any major purchase that we have, we actually withdraw that money from our privatized banking system, and
You take a policy loan.
Take a policy loan. We withdraw, take a policy loan, and we're good bankers. There's so much into this that we're not going to be able to cover it in one episode. But hopefully it piques somebody's interest.
Yes. Yes.
So that way you start looking into it a little bit more on your own. So that way you can gain the knowledge that you need to have to be able to understand and to wrap your mind around it some more. We started with a car. Because that was Nelson's primary example of how you can actually become your own bank by purchasing all of your cars. So we started with a car, and then all the way up through our kids graduating Clemson University, debt free through our banking system. And so we're good bankers. You don't have to be a good banker. Good bankers pay themselves back. Why would you not pay yourself back? You would have to pay your bank back if you took one from a commercial loan. Well, inside the policy, if you don't pay the policy back, say you have an investment or another opportunity that you put money in a certain area and it doesn't go well, crypto, whatever else, you don't necessarily have to pay yourself back that, because the money will actually come from the death benefit in the end. But if you want to be able to earn the interest, which you get to set how much, you get to be able to tell yourself how much money you're going to make off of your money, and you pay yourself back all of that money, then you just made the money that the bank would have made.
What do you mean you get to set your interest?
You're the bank. Doesn't the bank tell you how much interest that your loan makes?
So the policy has a loan fee, right?
Sure.
Is it a fixed? So do you set them up with a fixed loan fee?
Sure. You can or you can't.
Or you can do a variable.
You can, you can't.
So
it's completely up to you.
Are you saying
It's up to your imagination.
So when you borrow against your policy, is the interest that you have to pay back on your borrowed
It's going to
amount
accrue.
lower than what the interest rate is on the actual policy, on the whole life policy?
For sure.
Give me an example.
Oh, well, basically, so say you're in different companies have different amounts. So that's why I can't give you a generic, but for generic numbers, let's say it's 7%. It's not, but let's just say it's 7%.
What's 7%?
The amount of the interest amount that the company is actually going to charge you, whichever company that you're using, whichever policy it is, that they're going to charge you for pulling your money, because you don't pull you don't pull your money out of your account. It comes from the general fund. So your money's still growing inside of your policy, just like it's sitting there, because the money's coming from the general fund.
That's important.
It's very important.
Yeah.
But how much is the cash value accumulation? What's the interest rate on the cash accumulation portion?
Anywhere from 2 to 4% guaranteed from company to company. That's the guarantee.
And then there's usually a dividend.
Usually a dividend. Most companies are around 6 to 8%, somewhere in that neighborhood.
Total with the dividend?
With the dividend.
And so you're pulling it out at 7? but it's paying 7?
No, I just said, let's just pull a number. So, because at this point in time, I don't care if they charge me 14, because when I pay it back, I'm going to add interest to that. For
That's why you
multiple
said
different
you can
reasons.
make your own interest.
Correct.
Got it.
Explain. You lost me.
Exactly. I wish I could
And
dumb
we
it down a
lost
little
some
bit.
other people,
I wish
too.
I could dumb it down a little
What do
bit
you
better
mean?
because
You're
it
gonna-
took.
you're gonna
This is why
add
it took me
interest to it.
years and years and years to really start to wrap my mind around it, because I'm a good banker and I'm going to bank.
You said you don't care if they pay you, they charge you 14, because when you pay it back, you're going to add interest.
I'm going to charge myself 20 because I'm going to write that off.
Because you're going to put more back in
Absolutely.
than what you borrowed.
There you go.
So
See,
you're just calling
such a
that
good
interest,
host.
but you're actually just putting more in.
Correct. Yep.
Okay. I'm just
It's
trying
just
to
making it
simplify
nice
it
to
for our
clarify,
listeners.
the interest that they're paying is on the cash value that you've had in the lifetime of that policy.
Correct.
So it's not just the cash value that you borrowed against.
No, it's just the money that I pulled out of the policy itself.
Yeah, but
So it's only on the loan
Only-
portion that you're
only on the
paying that
loan.
interest rate
that you're only paying the
Only-
interest.
only on the loan.
That makes sense.
Yeah.
Yep.
Yeah.
while you're using it.
Watch this podcast a couple times.
Yep.
Yes.
Well, you
Yeah.
need to do that. You need to read the book.
Yeah.
You know, like I said, it took me 2 years to listen to a man that I trusted with my life. I mean, this guy, I try, and it still took me 2 years to be able to start to wrap it up and to be able to understand. So it's not something that it's different in the life insurance space, because we have a lot of agents that watch this. I know that this podcast brings so much value to me because I watch it as soon as it comes out. I'm usually listening to it within the first hour, and so I know for a fact
He's
that
a fan and a guest.
100%.
Boom. Love that.
I promote this.
Who
This
else
is the
wants to be
greatest.
a fan and a guest?
It's the greatest
Maybe you.
resource that you can have, because I mean, how many people are bringing this kind of value to people that they're not financially incentivized for? You guys are amazing at the value that you bring. You touch on all types of subjects, and this is a subject that I wouldn't have known about if it wasn't for a friend of mine in the insurance space. I don't know that you could develop a lead for this. I don't understand like how you would be able to do it, because it really takes somebody that you trust for them to be able to tell
So
you
it's
about
warm
it.
market.
It's 100%
It's all warm market with people through credibility, trust. So what has it done for you? What has this type of product done for you in your financial situation, and what does it do for others?
Yeah. So
Because we said don't bank with them, bank on yourself. But what's the benefit?
well, the benefit was for me personally, and I can only speak for personal experience. Now, I have tons of other stories from other people, but I'm not going to use their experience. I'm just going to tell you about my experience. So for my experience, when we made the journey into life insurance, it wasn't like I woke up one day and said, oh, I'm going to become a life insurance agent. We had a company in the travel space where we offered a membership, and when COVID hit, that business was completely shut down. Now, imagine I poured my heart, life, and soul. If you're an entrepreneur out there, imagine pouring your heart, life, soul, blood, sweat, tears, everything into something and then losing it. I'm not alone, am I? Like, we've all been in that situation before. Now, for me, that was the first time that I had sunk everything into something. Now, I've had some stuff that's won and I've had some stuff that's lost before. I've been an entrepreneur since I was 19, but I'd never been that fully invested, because we built teams there. We built relationships. We poured into people. And then to have something like, it was heart-wrenching. I was depressed for a long, long time. And I said, what am I going to do? Well, at that point in time, I'd already referred a bunch of people to another insurance agent to be able to refer this product, because I felt like
And
it
this
was
concept.
something in this concept, because I felt like it was something that was a necessity, and I wasn't even receiving a compensation from it, because I just thought people, my friends, needed to do it
Needed to
because they
know.
needed to do it. You just got to know. Whether you do it or not is completely up to you, but you're going to know the information that I know. Right? And whatever you do with that information, if you want to wad it up, throw it away, that's fine. Or if you want to dunk that sucker, I don't care. It's completely up to you, but you were going to know about it. Well, during that whole transition, I said, I can help more and more people with this. And I didn't know anything about the lead system. I didn't know how you can actually purchase leads because people want a final expense product or mortgage protection. Or I didn't know any of that. What I did know was I knew a lot of people that would be interested in this product, and I could go market this product to it. So
What
it was
did
my
the product do
transition.
for you
The product,
and your family?
So during that time, we literally had zero income, and I had 2 kids in college. It was the only way that we survived, is because we were good bankers. We always paid ourselves back. And during that time when we had no money coming in, our policy paid for itself. and we were able to take the cash value out of that policy and actually live on that. My kids were able to live on that. My kids were able to go to school on that. We ate on that. All of that out of that policy that entire time, just because we listened to somebody 8 years ago.
See, and that's pretty exciting, because if you have a 401k and you're doing that,
You can't get your money out.
No,
you're
you're
getting,
locked up.
Well, you can, but you're paying huge penalties.
and taxes.
Yeah, you got to.
Yeah.
It triggers your marginal tax rate immediately, plus like a 10% penalty. I mean, it's disastrous.
You know, it's crazy is because from that, I've actually had, multiple friends get involved with the space. They become agents way before I did.
And this money's going in after taxes, so it's growing tax free.
Would you rather pay taxes on the seed or the harvest?
Yeah, the seed every time.
Yeah.
And some people, they don't think about that concept. And you might want to do some discovery on that seed or the harvest, where you're paying your taxes and how it's worth more. The government wants you to wait until the harvest because they're maxing out their.
And if you don't, they're
return.
going to hit you harder.
Yeah. Well, and then you have to take the minimum required distribution once you get to a certain age, because they want their tax portion.
Got it.
Give me.
All right,
Give
it's
me.
time.
It's like Pac-Man.
It's
Right? They want it. I mean, this is a concept that I don't think we've talked about a lot here.
No, I think it's valuable, and especially if you're an agent, you're getting started, and you have to write a policy on yourself. Like, you need to have a policy, for crying out loud.
Got to.
Yeah.
You need to have a policy, but it has to be structured right if you want to take advantage of that, because you said
Yeah.
the first one wasn't done right, so you had to switch it up and get it set up right.
You can mess it up in a hurry. So you need to have somebody that's knowledgeable, at least be with you, consult. I know that, in this space, I've learned from you guys. I said it earlier, I'll say it again. You guys bring so much value to the marketplace, and ask for nothing in return. It blows my mind how you guys do that. I like it. I want to be around you guys because you make me better through that thought process. Come on, baby.
Well, that's why we've got you back.
And so there's people out there, myself, there's other people out there that will bring value. If you're in the space of insurance right now and you're looking to be able to grow in knowledge, there's resources out there that you can plug into that cost you no money. Nobody's looking for anything in return, because we need to help everybody. Everybody needs to understand this process.
The cool thing about this journey for you is it opened up your eyes to the value of life insurance, and then it led to a conversation about becoming an agent because you saw the value. And now you're building a team.
Absolutely.
And of course, this concept of the possibilities inside a life insurance policy extend to becoming debt free. You can use a similar concept to take a 30-year mortgage and literally structure it instead of the traditional way of making all your payments on time and all that stuff that people do to try to pay down their debts, putting it into a whole life package and using a strategy to really eliminate your debt in about 10 years or so.
Just met with a client of mine. He turned 25 this year. He started his policy when he was 24. We had a plan. You got to begin with the end in mind. He had a plan of what he wanted to do with the policy. I had talked to him about it for 2 or 3 years, just, dripping little hints and nuggets, giving him little books to read. I gave him Nelson's book to read. I gave him a few other books to read, gave him a couple podcasts to listen to, just for him to be able to gain some information on it. He came to me. We got him set up. Now this year, we've just had our yearly meeting with him to plan out. We're gonna start to. He took out a loan for his wife's car, and he took out a loan to build a privacy fence for his kids. He's got 2 really, really small, 1-year-old, and he adopted a 3-year-old. Just dude, talk about a great guy. Oh my goodness, a great guy. But we're going to take the cash value, and we're going to start to pay down those debts, and he's going to have that paid off. And I actually. I'm excited now because now we're talking about attacking the house next.
Yeah.
This kid's going to be 32 years old and he's going to have his house completely paid for.
So the market is pretty healthy people who have debt.
The market's anybody with a breath.
Wow.
Well, if you're really sick, I guess he's trying to
That's
say,
what
is
I'm
there a
saying. It'd be guaranteed
qualifier on
issue.
there? If you
Yeah.
got someone's really sick and can't qualify for a good
You
product.
can qualify. So Nelson's really, really smart when you're talking about using your imagination. You use your imagination. There's insurable interest out there.
Got it. Okay. Yeah. So this is the great thing, man. You brought so much value. I know people's gears are turning. My gears are turning. Like, there's some great stuff here. You've written a couple policies. How many do you think you've written in this space?
Well, I personally have 6.
On yourself.
Myself and family. probably this
they're all whole
year,
life.
this year 6 or 7. Just this year is February, so we're not writing multiple ones every single day because there is a process to this. I mean, there's a trust.
But these are
factor.
sizable premiums too. These are sizable policies.
You're speaking. You can speak with authority in this space.
for sure.
Yeah. So if they have a question, I know there's going to be questions. If they have a question, they can reach out to you.
The easiest way to reach out to me is Jonathan, Jonathan, at legacylife.co. That's my email address. I'm sure you guys will put my socials up here on the podcast. They can reach out that way. Slide into my DMs that way.
That's what the kids are saying.
I know that's what the kids are saying. But any way that we can help, any way that we can bring value, the one thing I'll tell you is I don't know everything. I learn new stuff every day. I'm not afraid to say that I learn new stuff every day. If you're not learning while you're actually practicing banking, you're not doing banking right. Mm-hmm. So I learn every single day. I've got a network of friends of mine that I feel like are way smarter than me too. But we're always a good connector of people. So any way that we can help, we're available.
If someone wanted to get started with you and they wanted to do this part-time while they were doing their full-time job, they can become an agent and work with you, yes?
I wish I would have done that a long, long time ago, for sure. I wish somebody would have said, hey, why don't you go get your license and you can actually help set these people up.
Correct.
Instead of just referring all of those sales to someone else.
Yeah, I had a really good friend of mine. We talked about him this morning.
We did.
Owns the gym. Yep. And he had reached out to me and he wanted to set up some new policies. I said, you need to go get your own license.
Yes.
Yeah.
Because you're going to be giving up a lot of commissions to someone like me or someone that I'm going to assign to you to help you. And you could be making those yourself. And there will be other people that you find that you can actually contract as well, and they can do that. And you don't have to do it full time. Do it as you need to for your life. And so he actually just came to me about 2 weeks ago, and he goes, hey, man, I just want to say thank you for encouraging me to go get my license. Because he used to have his license like a long time ago, and he never did anything. He said, thank you for encouraging me to go. He said, I've written probably about, I think it was close to like 100,000 in premiums just on different policies.
Wow.
Of course, which he's getting paid commissions on. And
Very cool.
You're adding significant annual income when you're doing that and helping families, even if it's only one a week, but a sizable policy can change someone's life, but it can also impact your life in a tremendous way. So.
The only thing I like better than banking is helping other people bank. It's so much fun.
Yeah. Well, cool, man. Thanks for coming in.
Thanks for having me on, guys.
We're glad we were able to squeeze you in the middle of a non-podcast day.
I love it.
Chest bump.
Let's go, baby. Let's go. Super Bowl
weird.
weekend. Let's go.
All right.
That's right.
Well, thank you guys for watching. If you got any questions, hit us up. You know how to reach Jonathan. We'll see you on the next episode of the Life Insurance Academy podcast.